Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Weekly Roundup, our debrief on the biggest stories in markets and economics. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, senior reporter and writer of the Money Distilled newsletter.
Hi, John.
Hi, Merryn.
You've been away.
I have. It was great.
Yeah, get a suntan.
No, I didn't, because it was surprisingly cold snap in Greece.
You've been in Greece. Do you know what? We're going to come to that in a minute. But anyone who's listened to our personal finance podcast already this week will be wanting to go to Greece because do you know what? Comes really, really high up on the list of great places to pay for residency or another passport. Oh, hello, Donald Trump. Coming to that in a minute. Right. Let's talk about, while you've been away, every time you go away, something happens in markets. It's like you are the signal of all signals. And obviously, the shift in momentum from the US stock market and in particular from US technology stocks has actually been underway for a while. It's just a little under the radar. We've talked about it in podcasts over the last few months, how actually the US is not leading the world anymore. But the last week or so, it's really begun to step up, and you've seen European stocks really rising quite fast and American stocks not so much. And now the Magnificent Seven is even what we call correction territory, right?
Yeah, down 10%. And if it gets to 20%, that's a bear market. And obviously, those are entirely unofficial. But it's, it gives you a sense of where you are. And if you've got to put definitions on these, it may as well be a number. I mean, a lot is driven by Tesla, but it's interesting, it's not all driven by Tesla, because Tesla rocketed whenever Trump was elected for fairly obvious reasons, and it doubled, and it's now down about a third from where it doubled to. But the rest of them, most of the rest of them have gone down as well. So Microsoft, Alphabet. I think the only two that are still up a bit are Facebook and what was the other one? One of the other ones. But the point is, they've kind of run out of steam a bit. And we do get NVIDIA's results later today. And obviously that might change things. I mean, maybe NVIDIA's results will surprise everyone.
That might restart the AI bubble. That is possible. But I think what I want to do is talk about the way other people are looking at this. So we're getting a lot of talk about what might be wrong with America, lots of blaming things on Donald Trump, lots of talking about the American economy, lots of talking about how AI might not be what everyone thinks it is, etc. And then on the other side, we've got a lot of looking at Europe and talking about how maybe Europe isn't as bad as you thought, and lots of its problems that we believe are structural are really cyclical, and everything's just going to be fine. But to me, it just seems more as though investors, and maybe DeepSeek was the trigger for this, are looking around and going, yeah, maybe America isn't the only country worth looking at in the world. Maybe it is a little expensive, and actually I'm just going to move some money into something a little bit cheaper. So we're not really looking at maybe America isn't so great and maybe Europe is a bit better. We're just having investors looking at their valuations and going, that stuff's really expensive stuff. In the end, it tends to come down. That stuff kind of cheap. In the end, cheap stuff tends to go up. So I'll just shove some money over there. It's just about flows.
Yeah, I think you're right. I don't think it's to do with anything other really than relative valuations. It boils down to that thing. I mean, one thing that's really interesting is that the thing that has actually been keeping up with the Magnificent Seven for about 3 years now, and quite a few people are noticing this now, is European bank stocks. And you cannot really think, other than gold miners, of a sector that's been more detested and despised than European banking stocks. And really all that boils down to is that they have become that they've been cheap, and then they've started surprising the market by having slightly better earnings than people thought they would have, and by being in slightly better condition than people thought they would be. So it does sort of turn around. It is based on that thing of something starts surprising to the upside and something else starts surprising to the downside. And it's all about where they got to. And the other interesting thing actually is that obviously this is a weird kind of like mirroring of what happened in the dot-com bubble as well. So the dot-com bubble in 2000, you had the tech stocks and then everything that was boring, nobody liked. and then dot-com bubble burst, and then gradually we got the finance stocks overtaking the tech stocks until we got the banking bubble, and then that burst, and then in the aftermath of the banking bubble bursting, Amazon and all the rest of them started to pick up steam again. So it was probably about 2010 when the last, when tech stocks were really, in the dirt after the dot-com bust, and then they started to recover again, and then we sort of seen them become the dominant players again, and now they're giving way to finance stocks again, which is interesting. I'll be curious to see if that continues, but certainly the momentum is behind the European banking stocks at the moment. That's up 20% during the time in which it's taken the Mag 7 to fall into a correction territory.
The other thing, the thing you haven't mentioned, the other sort of basket of European stocks that's massively outperforming is defence. And go back a couple of years and no one would touch defence stocks with a barge pole because, they're nasty European stuff, not American stuff. And they're a value trap and they're not ESG. And so no one would touch them. And then this year alone, they're up to 20% plus, and a couple of the individual ones are up over 50%. So
some of them have been astonishing. The German one as well, Rheinmetall, is shot up as well. But you're right. It is. It's all about kind of dejected stuff being picked up, and almost like it is almost kind of like moods changing. It's one of those things that makes you sort of, you do think it goes back to that thing. The markets are only a bit rational. They're not that rational. And a lot of it is about whenever the turn happens and everyone suddenly notices that these things, actually they are worth investing in after all. And then it's as if,
it's partially sudden. It feels sudden, but it's not really. It's people regaining their sanity one by one until enough people have regained their sanity that you can see it in the flows. And I'm just looking at the valuations, the latest equity lens from Schroders, which gives us these where all valuations are relative to their 15-year median. And if you look at the US, and I know we say this all the time, but it can't be said enough how insanely overvalued this market is. And this is including the Mega 7. So we look at the US market relative to its CAPE, its cyclically adjusted PE ratio, which is one of the best longer term signals in the market. It's 39% overvalued relative to that on 36. On a forward PE, 31% overvalued. On a trailing PE, 35% overvalued. On a price to book basis, the market is 70% more expensive than its 15-year median. And on dividend yields, it's 56%. Now, the interesting thing, though, is if you look at this chart from Schroders, which you and I rather like, we look at this a lot. It's nice and simple. Comes in different colors. We don't have to do much thinking about this one. Even the markets that we habitually say are cheap are not particularly cheap. Right? No. So, Europe is a little bit expensive on a CAPE. It's a little bit expensive on a forward PE. It's a little bit expensive on price to book. It's only a tiny bit cheap relative to its long-term median on a trailing PE basis. And same with Japan. Mostly you've got orange and red there, not green. Same with the UK. Even now, it's a little orange and red as opposed to green. It's only cheap on a trailing PE basis. So even these markets, they're not cheap. They're just bizarrely cheap relative to the US, right? Yeah. And that's enough to make people think about the shift. Now, we've got, actually coming up later this week on Friday, we've got our big interview with Jeremy Grantham. And this is fascinating. I know, we pull in the big hitters on this podcast. And one of the things he says, it really is a must listen, everybody, because it's not just about markets. There's a whole load of incredibly interesting stuff in there aside the idea that the US market is too expensive and should crash, et cetera, et cetera. But one of the things we talk about in it is, if the US market crashes, where are you safe? And the answer, of course, is kind of nowhere, because all markets will go down in sympathy with the US if it were to do something sort of sudden and dramatic. But cheaper markets will regroup much more quickly. And over a decade, those are the markets that will outperform massively. The US has had a great decade. Now somewhere else will have a great decade. The baton is just passed, and that's the way it always is. And that's the bit that maybe some investors have forgotten over the last few years, that the baton always gets handed over.
Yeah. The other thing I'm quite interested from that point of view is looking at which emerging markets might end up being excellent buys around about now as well. I realise that some of them we've more qualms about than others, or rather I do. But like China is probably a decent bet now, even,
investable again, John.
You feel about that? I still don't think it's investable. I think it's just short term probably do
Well,
quite
it
well.
is. It's cheap. It's been cheap a while, and also, DeepSeek reminded everybody that AI doesn't just exist in a little American bubble. There's massive technological change going on in other places, and you can buy that change a lot more cheaply than you can buy American change. But John,
Yes.
you're pretending that what you're really thinking about is emerging markets. I know, and all the listeners know that you're not really thinking about emerging markets. You're thinking about Bitcoin.
But that's not what I was expecting. But yes, of course, that's what I'm thinking about.
I don't know what you thought. I thought you were thinking about.
Well, yeah, actually, UK equities, if I'm honest, but that's nothing more sinister than that. But,
Anyway, Bitcoin. All this time, you've been the only person on these podcasts, the only person out of you and me who doesn't own Bitcoin. So now I imagine that you're feeling a little bit smug. Now it's down to what? It's just hit $86,000.
you're right. I'm thinking, when should I catch this falling knife? When's it going to be time for me to buy in?
Maybe that's what you're thinking. Or are you thinking, I knew it was only correlated with NASDAQ. I knew it was just a speculative asset. I was right. Is that what you're thinking? I don't want to put words in your mouth, John. I don't want to put words in your mouth.
No, I hate it. Like Bitcoin is definitely a risk-on asset. I think it's reasonable to say that.
But we are risk on right now. We're risk on European defense stocks. We're risk on European banks. We're risk on Chinese tech. We're just not risk on NASDAQ.
Oh yeah, mind you, is it just a US tech play? That is.
Is it?
That is a good question.
Okay, all right. So what with everything going on, not everyone is going to have quite as much money as they used to. But if you've got $5 million and you don't already live in the US, Donald Trump has got a deal for you. You can give him. We haven't got full details yet, but it looks like you can give him $5 million or people around him, and he is going to give you a visa that will give you a route to citizenship. It's going to be an investment visa of some kind. And at the same time, he's going to dump the EB-5 visa, which is the one you can get at the moment if you bring in $1 million and employ a certain number of people. And that also gives you a green card and, in the main, some kind of path to citizenship. But I think the $5 million is going to give you a better, faster route, which is quite right because you're paying another $4 million, right? It should be faster. So here's the thing. We talked about this earlier in the week. I did a podcast without you, John, by the way.
Oh no!
I know. It was really, really fun, and we talked about all the different places where you can buy residency or buy citizenship, and why you might or might not want to do that. And interestingly, Dominic, who I was talking to about it all, the people who were trying to get second passports and second residencies are very often Americans and British people. So it's not people trying to get into America; it's people trying to get out of America.
Yes.
So that's interesting in itself. The second point to make is that $5 million is really expensive for a passport. It might not be expensive for an American passport, depends how you look at this stuff, but it's expensive for a passport in general. You know, you can pick them up in other places for a couple of $100, and not only that, you can get them in these other places, and you're then not liable for American income tax, because this is the odd thing about this offer. So let's say you have $5 million, you buy an American passport effectively. This may be what this gold card is going to be. We don't know quite how it's going to work. He said it gives you green card privileges and it's a route to citizenship. So let's say, for example, that you are a Russian oligarch and you give Donald Trump's government $5 million and he very generously gives you back an American passport. Now, you're liable for American federal taxes wherever you live. You might go to Monaco. You might go to Malta. Maybe you'll go to Nehru. We talk about that. They're offering a great opportunity to get a passport in exchange for paying into their climate change fund. That's a good one, quite cheap too. Maybe you want to go and live in some of those tax-free places. Maybe you're going to go live in Dubai. But wherever you go, you're still going to have to pay American federal taxes. I mean, in a way, I kind of want this to happen because I'm looking forward to seeing Trump's government arguing with some very rich foreigners about whether they have to pay American federal tax now they've got their passport or not. But yeah, anyway, I'm finding it all a bit confusing.
But it's also, if I've got $5 million, really, I mean, I get American citizenship would probably be useful for certain things, but if I'm already sitting in 5 million, is it worth opting into the American global tax system, which is very intrusive and makes lots of Americans' lives over here pretty miserable, certainly in the financial services side of things.
Yeah.
You're right. It seems a slightly strange one. Although it'll be interesting to see what conditions are actually attached to it.
Yes, and
like how embedded do you end up being for this 5 million?
Well, if you citizenship, I think. I mean, it may be, and people have all sorts of reasons for wanting to do different things, but it may be that you might feel that you're the kind of person who at some point in your future may find it attractive to be protected by the American state.
Yes.
But I'm also thinking there maybe aren't that many people in that situation. I mean, I'm not thinking to myself, there might be a point in maybe 5-10 years where I might really like to have the American state protect me. Or actually, maybe everyone in Europe feels like that. Whoa, hang on. I mean, everyone in Europe feels like it would be really great to have the American state protecting them. Because not that long ago, we were getting it for free.
Yeah, well, yeah. But we also, we didn't have to pay tax to them either. And the other problem is, if you're the kind of person who feels that they might want the protection of the American state at some point, there is also the risk that you're kind of person who would potentially be extradited to America for something completely different. So I don't know. I'll be interested to see how many people go for it.
Yes, I'll tell you what. I think we'll end like this. If you listen to the podcast we did earlier this week that was out on Tuesday about golden visas and routes to citizenship in various countries around the world, you will find that there are many great countries you can get a passport to, or a residency right, or some kind of low tax residency, etc. Lots of fabulous options. If you don't like any of those options, but you think you might be the kind of person who would buy a passport off the Americans over the next few years, do get in touch. Because we would like to hear about it, wouldn't we, John?
Yeah, I mean, we would probably like to interview you.
Yeah, heavens, we'll have you on. Well, if you're that person, get in touch. We'll have you on. Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on Twitter @MerrynSW and John_Stepek. Also, do sign up to John's newsletter, Money Distilled, and do also sign up to my own newsletter, Merryn Talks Money, which talks a lot about what we've talked about on the podcast and all sorts of other things besides. This episode was produced by Summer Sadi, production support and sound design by Moses Andam. Our executive producer is Brendan Francis Newnham. Questions and comments on this show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net. And remember, if you're looking for American citizenship, do get in touch.